Welcome to Blockchain Asia podcast. I'm your host, Coco. I interview thought leaders from Asia or those active in the region to discuss emerging trends, new deals, and regulatory developments in blockchain, crypto, and digital assets. To get more content and keep updated, please subscribe to my free newsletter, blockchainasia.substack.com. Kevin picked up this book when he was in Singapore. I am not aware of any such book available in the market that provides framework for digital asset valuation. I want to thank HashKey Capital's team for putting in a time and effort to come up with this book. I want to show it to everybody. Yes, this is a book. It's wonderful you can come and do this book talk. There's no lack of skeptics still questioning whether Bitcoin and cryptocurrencies have any value, including Warren Buffett. He made a very famous comment that Bitcoin is a gambling token, which doesn't have any intrinsic value. This book may provide argument to his comment. Let's dive in. Why don't you start with giving an overview of the digital assets covered in this book?
First, thank you, Coco, for inviting me to have a session to talk about this book. This book launched this April. We spent the last whole year to draft and also summarize the materials and information. Our team has devoted a lot of time and resources into this, knowing that we already have a book before that is crypto VC related, that is crypto investment or blockchain investment guidance. We can summarize the sectors, our insights about the industry. For this book, it's more focused on the valuations, more related to the secondary market of the crypto industry. Some famous investors like Warren Buffett are not fan of all the cryptos. They don't think they have values. But actually, given so many years of development of crypto assets, Bitcoins, I think there are some valuation methods. We didn't make new valuation methodologies, but try to summarize all the methodology of the market to give a clear picture to the investors or beginners how we look at the crypto assets and how we combine the traditional value method to evaluate the crypto asset. I think there's a little bit different between the valuation and the evaluation. Valuation is more like from a mass perspective, but the evaluation will be including more non-quantitative factors. So this book basically covered all the methods seen in the market, and also we do some alternatives. So the structure of the book is simple. We have different category of digital assets. I think different methodology will be utilized for different crypto assets. That's why we're doing categorization. So the first is the coin, and second is public chains, or we so-called layer ones, and then DAO tokens, the STOs and NFTs. This is how we look at the crypto market. We can use different method to do the valuation of different crypto assets.
Since we don't have a lot of time, I wish we could talk about every category covered in this book, but we cannot. So we can only scratch the surface of the book and allow the readers and audience to dive in by themselves. So let's focus on the valuation for Bitcoin, maybe Ethereum. If we have time, we can also touch on Sol or Solana. When it comes to valuation of Bitcoin, there are multiple methodologies listed in this book. And which one would you use or prefer to use for the valuation of Bitcoin?
In this book, we have listed several methodologies. But the method I'll be always using will be the NVT and MVRV. NVT is like the traditional price to earning ratio, the kind of methodology. It is using the market cap divided by the revenue or fee generated of the network. So I think this is the real earnings or real profit that a network can produce. Because of the transparency, no one can change the record. This transaction values is valid and can be tested. It's the method that no one can deny. And this is very similar to the PE ratios and very easy to understand. I think it's good for the traditional investors to look at the network. Someone will be argued that this transaction value cannot be simply compared to the earnings of the traditional companies. We don't have any other alternative to describe the earnings of the network. From utility perspective, the more people using the network, the more transaction fees will be generated. This is a common economics theory. So I think it will be valid for the network because the network is not a company that have earnings, they have income statement and cash flow. The network don't have this. We have to do some adjustment according to network features. We can also see from the market movement. When the market is going to be a bull market, there will be more online transactions and the more transaction fees will be generated. So that is how network working. That can be explained by the economy nature itself. So I'll be using that valuation method as primary method. Yeah. And then we'll be using several different methodologies. Some of these are quite long-term. Sometimes I'll be using MVRV, market cap divided by the realized market cap. There will be a curve. We can see that the curve will follow some patterns. In the last few cycles, they have some extreme values high or some low extreme values. And that value will be moving within this range. So this gives good examples and patterns that we can learn from past historical price movement. They will also generate some trading ideas or insights for the investors. That is something I would also recommend it using. Bitcoin has a unique stock to flow models. This is something we didn't find any scientific explanation, but actually they have good practical results, good for a long-term Bitcoin evaluations. Some traditional investors, they're using this method to estimate the Bitcoin prices in the next 10, 20 years.
You mentioned several methodologies. Let me step back and start with the first one, because you mentioned NVT. Can you repeat what NVT represents?
That is a market cap divided by the USD volume transferred through blockchains. That is the measures to look at network activities. When there are more activities, that means network are providing more values, more earnings. That would be analogy to the traditional PE ratios.
When it comes to the transaction value, is it the fees that users pay to the network or the transaction value going through the network?
In these circumstances, you can use both because the transaction values and the transaction fees, you can substitute one with the other. Because when the transaction volume is high, their fees will also be high. But not always. Sometimes volume is high, but fee will be low. But generally speaking, more volume, there'll be more fees in normal circumstances. Extreme instances, when the network is very busy, you cannot generate a lot of volume because not all the transactions can be recorded and wrapped in one transactions. So actually, at that time, fees, this is high. Fees and the volumes, you can replace with each other in normal situations. That will be divided into two different valuation methods or parameters. You can use both, but I think generally speaking, they will give you the same insights towards the network activities and the valuation of the Bitcoin.
That's helpful. And then the next one you mentioned, MVRV.
MV stands for market value. RV means realized value. MVRV methodology is for long-term, not short-term trading. If you're short-term trader like day trading or weekly trading, this indicator will not give you any meaningful directions.
When you say long-term, how long is it? 5 years, 3 years, or 10 years?
I think at least about 2 years. Because when each cycle, we all know in crypto, there will be a 4-year cycle, right? So the 4-year cycle, the MVRV will have the high peak and the low. So this will be moving between this peak and low. It gives you about 2-year insights where we are at the market now when we compute the historical high and low. So in extreme lows, we can make the right decision that we buy the asset. In the range near the historical high, it's a time to buy, but good time to sell. Let me give you at least about 2 years insights of the market cycles, and also give us some guidance on where we are. For example, now when people talking about the bull market of Bitcoin, the bull market ended now, if we look at the MVRV ratio, we are still in the middle of the bull market because this indicators has not been reaching a very high levels. I think still in the middle of the range. So that gives you some comfort. But actually, if you're doing the daily and the monthly tradings, this will not give it too much information. It's give you some confidence. And in the long term, buying or selling points is not a short-term indicator.
How about start to flow? Is it for long term or for short term?
Start to flow give you a very long-term confidence that how Bitcoin will be reaching or how much that Bitcoin price will be reaching because it's using a very unique structure that Bitcoin it has. This method actually have a very good statistical significance in the past. It can explain more than 90% of the variance of the Bitcoin prices historically. If you look at these cycles, I think the price line of Bitcoin follow as stock to flow models. These models predict the Bitcoin prices jump multiple times in the next few cycles. The logic is Bitcoin production rate will be lower every 4 years, and the flow will be higher. So that is something will be different between the stock and the flows. So Bitcoin has limited supply. That's why this model will work. And another reason is more people using it, more people will believe it, and the price will be following models. That is the very interesting pattern we have recognized for Bitcoin.
You mentioned 3 methodologies, NVT, MVRV, and stock to flow. Does that mean that these 3 are your favorite or your preferred methodologies?
I would say currently they are my favorite because they are easy to use. I don't think for Bitcoin they will be adopting very complicated models. But in the future, the Bitcoin ecosystem will be becoming more complicated. Bitcoin will have its own layer 2s and also have some inscriptions, the NFTs. So these models, I think, is for the last cycles. Bitcoin is only store of value and single assets. No other things happen on Bitcoin network. But in the future, Bitcoin will be somehow learning the experience from Ethereum or other kind of layer 1s. They're building up its ecosystem. So the valuation method will be changing. In the future, there'll be other methodology coming out. We keep looking and learning.
Great. How does Cathie Wood come up with a prediction of Bitcoin price to 1 million by 2030? Which of the methods does she use?
Cathie Wood, the methodology is different. She gave an estimate how many investable assets globally by the end of 2030. Yeah. And 2030. Then 2030. Yeah. And then she estimated a ratio, how many investable assets will be allocated to Bitcoin. So when you estimate different ratios, they will give you different results. I think her estimate for this ratio is around 5%. That means in 2030, 5% of the global investable assets will be hundreds of trillions of investable assets. If you estimate 5% into Bitcoin, they will give $1 million US. And if you estimate 3%, the price will be different. So I think that assumption also included the ETF because it's hard to allocate 5% of global invested assets into Bitcoin without the help of the Bitcoin ETF. Given that fact that Bitcoin ETF, we can estimate each year will have new flows of money into this market. After launch of the first gold ETF, 5 years later, the gold price has been growing 4 times. That's why the Cathie Wood have such estimation. I want to mention that if we look at the market cap of gold, it's around 14 trillion. If Bitcoin can reach that market cap, they give you results of around $500K US per Bitcoin. That is numbers that people think Bitcoin can at least achieve, because Bitcoin, if you want to play the role of digital gold, its market cap need to be very near the gold market cap. So 500K is the price for the Bitcoin to demonstrate its capability to be the digital gold.
I just checked the market cap of gold and Bitcoin. Bitcoin's market cap right now is about 1.2 trillion, and gold's market cap is about 16.9 trillion. So Bitcoin is about 6.8% of the gold's market cap. So long way to go. Long way to go. But do you think that Cathie Wood's projection is close or off?
I think at least the Bitcoin price should reach a level around 500K, as I said before. After that, I think more and more people will allocate money into Bitcoin. There's still not a very clear conclusion if Bitcoin is a safe or risky asset. Gold, definitely a safe asset. When people figure out how Bitcoin's characteristics, they will have more confidence to allocate money.
Totally agree. Another thing that I want to point it out, even Bitcoin ETF is now regulated. A lot of large institutions still watching and waiting for clarity of regulation, especially in the US. If we have more clarity in terms of regulation, that will unleash even bigger demand for Bitcoin products. How about moving to the next chapter, which is the smart contract public chain? Ethereum is in this category. What are the methodologies that you think work best for Ethereum?
I think for ETH or public chains or layer ones, they have different features compared to them, because ETH itself, it's created to boost the digital economy. There will be actual business or values to be generated on the Ethereum and other layer ones. A lot of flexibility for investors to evaluate the values of Ethereum, because you can compare it to internet platform. There'll be more people using it and more tradings or payment happen on this platform. And these are real values and will be recorded on the network. For the Ethereum, you just look at the fees as ways to measure activities on this network. So you can using traditional DCF method.
You like DCF or discounted cash flow for the Ether's valuation. Yes. I also saw this method is applied to the valuation of Solana or Sol. However, the result is quite off. And there's a significant discrepancy between the projected price of Solana and the current price. What went wrong here?
For layer ones, different layer ones have different fee structures. Except Ethereum, other layer ones, fee structure are designed to be low to attract users and developers using their network. They are designed to support a very high throughput, a lot of transaction at the same time. So that's why using the DCF, if you look at the earnings or the cash flows, the Ethereum and other layer ones are different. DCF doesn't count network safety. Ethereum must be the safe layer ones except Bitcoin, using dApps or smart contracts. That's why nowadays Ethereum has the largest developer group and largest user base because it's safe. For other layer ones, they are vulnerable to attacks, network failures. This DCF model has not considered these factors. When we're using the DCF model for the stocks, there are no such things called network safety. We need to consider this, and maybe in the future we can quantify these factors and compare different layer ones. That is something I'm thinking about when we talk the divergence of DCF results for different layer ones.
If you can come up with a model or method to quantify the security degree of a network, that would be wonderful.
Yeah.
Can I also come to this conclusion? If the fees for a network, for example, Solana, are extremely low, DCF model may not work as...
Can you repeat again?
My question is, from what we have discussed, can I come to this conclusion that if a network, for example, Solana, has very low fees, high throughput, DCF method may not be the best to do the valuation?
When you do the DCF valuation, count Ethereum. You just find all the other low fee layer ones compared together. It will give you a very favorable results. In 2019, we see many Ethereum killers near Solana, Cosmos, Polkadot. So we can group this Ethereum killer together. And because they are low fees, we can use in the DCF models as a group.
For Solana, maybe we can just quickly touch on it. Is there any methodology that you consider most appropriate for the valuation?
I think we didn't touch too much in this book regarding Solana. I know people nowadays, including myself, like Solana very much. But actually, from a valuation perspective, the Solana don't have a very unique valuation methodologies. In the second quarter, the fee generated by Solana surpassed Ethereum mainnet because of the meme coin. But nowadays, meme coin are not performing well. The fees in Solana will be going down. If you look at fees, that's very fair because fees actual activities, but we don't have a unique methodology for it. Yeah.
I want to ask you about the data, because when you do the valuation and build your model, you need good data, quality historical data, for example, at least 10 years, 20 years, like equity market. But for crypto market, for Bitcoin, there is limitation of historical data. How much negative impact does it have on your valuation, your modeling, and back testing?
The benefit of traditional world is that they have Bloomberg. Bloomberg provides all kinds of data, but for the crypto world, you don't have that terminals. Starting from early stage of the crypto world, there are many data vendors. Our VC team has invested into several of these projects. These, in the end, we think there'll be a comprehensive terminals like Bloomberg in crypto. Nowadays, we have identified several reputable or popular data vendors like Glassnode, Kaiko, Coinmetrics, Nansen, and Crypto Quant. They have different specialties. For example, Glassnode is well known for its on-chain data and sophisticated indicators based on its on-chain data. Others, for example, Nansen, they follow smart money addresses. They give you insights at how smart money works during the market. And for others, for example, Kaiko have different data sets on the exchanges. but make sure that the data is verifiable, compliant, and regulated. Nowadays, you have choices, but in the future, they will be integrated together and licensed for compliance. Because if data are fake, then all the research and the inference based on this data will be invalid. So we need to trust data at first. In the future, I think there'll be Bloomberg-like crypto data vendors.
You see potential Bloomberg data terminal for crypto, for Web3 industry down the road. That totally makes sense. What is your short answer to Warren Buffett if he says crypto or Bitcoin or gambling tokens? There's just no intrinsic value. There's no value at all.
For Warren Buffett, he is not a fan of gold. So I think his mindset is easy to understand. He doesn't like any asset, doesn't have cash flows. So if you don't have cash flows, the price will be volatile. You cannot understand the models. So Warren Buffett's always saying that when you invest into a company, you need to understand its business models. But actually, some assets, if you don't have cash flows, you cannot easily understand the model. For example, commodity. No one can identify it has values. It's quite hard to evaluate its actual prices or values. I think values can be divided into different levels. Utility is also another kind of values. So the carbon, the metals, they have great utilities in the traditional industries. Even gold can find its utility. That is the methodology difference between different investors. Warren Buffett will emphasize the mode, the cash flows, the business models. So that is one side of the investor. But you cannot ignore other investors who traded or even speculated in the commodity market. You cannot say commodity is not a legit asset. But for Bitcoins, it's common that people criticize its gambling features because they don't have meaningful values for the real world. Not all of them are fan of this. But I think in the future, with Bitcoin achieving the roles of digital gold, no one can deny this. I think it would be alternative to the traditional financial system. That is something we need to make people know, that Bitcoin is not only a speculative asset, but will be an alternative towards the traditional finance ecosystem.
Yeah. Even when it comes to cash flow, you use the DCF to calculate the cash flow of Ether. That means Ethereum, the network, generate cash flow. So does Bitcoin network when it comes to the transaction, the fees generated on the network.
Yeah. I think the fee generated on Bitcoin is more about the asset transfer between different addresses. But Ethereum fees, majority of the fees nowadays, not only related to the Ether transfer between different addresses, but also related to the DApp or smart contract consumption by the users. We can easily see there's a ranking and there's statistics on how many Ether has been consumed by each kind of DApps or smart contract each day. That is the actual demand from users or from the DApps. But some people argue that this consumption is not US dollar based, it's Ethereum based. And they don't recognize this kind of value as real cash flows. I think in the future, when Ethereum some upgrades, its fees can be using USD or USD equivalent, like stablecoin. That is real cash flows generated. The Web3 economy, still small people have not recognized the value of Web3 economy. They are not thinking this is a very legit DCF model example. But I think when USD can flow in easily, people will recognize the DCF models.
Absolutely. So That's it for the book talk. So many interesting things in the book. We just cannot cover everything. I have to stop here, and I encourage the audience to read this book. I want to just quickly ask your thoughts about current market. It seems like the crypto market is not going anywhere for a while.
Well, some people argue that the bull market has ended. But as I said before, if you look at MVRV models and look at the historical patterns of Bitcoin price development, I think this is still in the middle of this bull market. And the reason is that the ETF effect is a external effect. No one can expect that. It's an accelerated bull market for the cycles. People are anticipating more based on the ETF, but actually ETF is a long-term factors. It cannot generate too much price appreciation in short terms. The price level, we already seen break the all-time high compared to the last cycle. Now just a normal price corrections. Most people still believe that in 2025, there'll be another peak for this cycle. And this level will be 100K to 150K US dollar per coin. That is the industry consensus. But for other assets, they're performing relatively weak compared to the Bitcoin, especially the Ethereum. I think that is some internal reasons, not related to the money flow. People are anticipating large-scale innovation from application perspective to the general users. They didn't see any. People mainly betting on infrastructures, not betting the application side. So I think application innovation progress a little bit behind people's expectations. That's why the Ethereum and other kind of layer ones are not performing well, including the altcoins. But I think we have been talking to different investors. But people think the altcoin season will come, just not as quick as we predicted before. When Bitcoin reaching a high level, like 80K, 90K, the confidence will be back. So that is the difference for these cycles. And recently, a little difficulty for industry players and participants. Leverage has been liquidated during this up and down. The money and confidence are not that solid as we've seen in the beginning of this year. But everything will be back, especially after the interest cut in September and US presidential election. Historically speaking, fourth quarter will be good, not only for the traditional asset, but also for the crypto asset.
Thank you for sharing your bullish sentiment. In the market, a lot of pessimistic sentiment. Some people are giving up on crypto market. You need patience, a lot of patience for this industry. And you're absolutely right. There are some positive things coming out, including the macro, including the US election, probably more clarity in the regulation in the US. Coming out soon, hopefully sometime first quarter or second quarter next year. Thank you. I feel much better after talking to you about this market. And let's keep our fingers crossed. Thank you for your time. This is a wonderful talk. I really enjoyed it. So I hope to bring you back sometime again.
Thank you for inviting me to join the session.